Ichimoku trading strategy.
Ichimoku Kinko Hyo, equilibrium at a glance, is a chart that shows trend, momentum, and support or resistance in one view. Its 5 lines include the conversion red line and the base green line, which form the shaded cloud, and is the key component of the indicator. The cloud acts as both support and resistance as well as a trend filter. A sell signal occurs when the price breaks downward through the Ichimoku cloud, suggesting a potential shift into a bearish trend. A buy signal occurs when the price breaks upward through the Ichimoku cloud, indicating a potential shift into a bullish trend.
Trading strategy with Ichimoku.
A stronger buy signal occurs when the breakout above the Ichimoku cloud happens while the red leading span is positioned above the green leading span. This alignment confirms that traders are moving in the direction of the prevailing uptrend. A stronger sell signal occurs when the breakdown below the Ichimoku cloud happens while the red leading span is positioned beneath the green leading span. This alignment confirms that traders are moving in the direction of the prevailing downtrend. Another strategy uses Sunko span A and Sunko span B in the following ways. First, Sunko span A, the average of the conversion line and base line, shifted 26 periods forward. It projects future support or resistance zones. Second, Sunko span B, the average of the 52-period high and 52-period low, shifted 26 periods forward. It acts as a slower, longer-term trend boundary.
A sell signal occurs when the conversion line, green, crosses below the baseline, red, and the price is trading beneath both lines. This alignment confirms bearish momentum. A buy signal occurs when the conversion line, green, crosses above the baseline, red, with the price trading above both lines. This alignment confirms bullish momentum. When the conversion, green, line crosses above the base, red, line and price is above both lines, with both lines positioned above the cloud. This setup implies a higher probability of a larger upside move because when both lines are above the Ichimoku cloud, it indicates a stronger long-term trend. Sell when the conversion, green, line crosses below the base, red, line and price is below both lines, with the conversion line and baseline below the cloud. The probability of a larger downside move is higher because when both lines sit below the Ichimoku cloud, it indicates a weaker long-term trend. Ignore sideways trend and meaningless crossover signals like this.
Thank you.